One of the most overlooked things I see startups do is not do proper financial planning. Financial planning is an essential component for any business, especially a startup. Now, I know you're excited about starting your business and you want to get working. However, those that at least have a rough business plan and have it reviewed by professionals have a much higher chance of success. So, where do you start? Hi, I'm Brandon and I'm a certified financial planner. A quick note that this video will be quite a lot of information. So feel free to slow it down, re-watch it, and ask me any questions in the comments if you need me to clarify. Let's get into it. There are two approaches to financial planning for startups: top-down and bottom-up. The top-down approach can define the market share you want to capture within a certain time frame. This can break down the market into three levels: the total worldwide market for goods and services, which is your TAM or total addressable market; the niche market you can reach, which is your SAM or serviceable available market; and the SOM, the serviceable obtainable market. This is your sales target, as it represents the value of the market share you aim to capture. You can actually estimate the costs needed to perform research and development, marketing, sales, and administration based on your target sales. The top-down approach is often very optimistic for your business, and so the SOM may not actually be a realistic approach. On the other hand, the bottom-up approach is less dependent on the market and focuses on your company's internal capacity, which begins with a micro view of your business. With this approach, you can estimate revenues, costs, expenses, and investments based on your business's resources and the available data. These two approaches will generate three outcomes: your income statements, cash flow statements, and balance sheets. These are key elements of startup financial planning and break-even analysis. These statements are the overview of your business's finances. An income statement is also known as a profit and loss statement. It's an overview of all the income and costs your company has generated and incurred over a given time period. This will give you an idea of whether you're profitable or not. This statement shows the gross margin, the EBITDA, which is earnings before interest, taxes, depreciation, and amortization, and net margin. They're all crucial indicators of the performance of your company. A cash flow statement displays the details of all the cash monthly. You will need to include the estimated sales, expenditures, and reconcile to subtract the disbursements from revenue. A balance sheet is a snapshot of the net worth of your business, which consists of assets, liabilities, and the difference between the two. It's usually given at the end of a fiscal year. This aims to show the capital need and refine the allocation of resources. So to sum up, the top-down approach is about leveraging market size data to forecast your company, and bottom-up approach is with regards to your company's internal data and capacity to make realistic assumptions. It's important to combine both approaches, since one will not necessarily give you the exact answer, but they will both help you reach some reasonable numbers you can use for raising capital or planning for your business. Now, your outputs may be a 5-year forecast, a 10-year forecast of the financial statements, like we mentioned earlier. These outcomes are the backbone of a financial model that help predict revenue, cost of goods sold, expenses, and investment in assets. A little tip: you can also create a worst versus base versus best financial model to get more realistic with your business financial planning. These financial models can also help you get funding and find investors when necessary. Now, I know that was a lot of information, so feel free to rewatch this video or ask me any questions in the comments below. If you want us to expand on any of these topics, please let us know. And of course, if you enjoyed this video, please be sure to like and follow, and we'll see you in the next one.